today's video, I will be discussing about dark pool trading. Now, before we move on to this topic, first of all, we need to understand that how a trading takes place on the stock market. Okay, then only we can understand this topic well. So let's say if you open an account in stock market, so they will issue a terminal ID. Okay, now you have to download that terminal, and then you need to enter your ID and password. Now, as soon as you will enter your ID and password, a live trading screen will appear. Now, that screen is the same which you can see on your stock market. Now, on this trading screen, there will be two tabs. That is the tab of buying and selling. So, if you click on the buying tab, so it will ask you that which company shares do you want to buy. The next, it will ask for the quantity, that how many shares are you willing to buy. Then after that, it will ask you the price at which you're willing to buy the shares. So if anyone in the whole market is willing to trade at the price that you have quoted, so automatically the shares will be transferred into your account. Now similarly, if I want to sell the shares, so again it will ask the quantity and also the rate at which I want to sell the shares. So if anyone in the market is willing to buy at the price which I have quoted, then shares will be transferred to his or her account. So this is the normal pattern of trading. Now basically, can I say that the trading screen is basically, it is not something which is confidential, right? Everyone can view it. So if you enter into share details on the trading screen, so you can view the current order of shares. Like let's take an example of one XYZ company shares. So if I enter into, let's say, this ABC company shares detail, so I can get to know that how many shares of that company are currently ordered. Okay, like I can see that what are the buying order for that company, what are the selling order for that particular company. Okay, like let's say for example, you were looking at this ABC company, and you saw that there is a buying order of 20 lakh shares at the rate of, let's suppose, $100. So obviously you will form some perception. Right now, what perception will you form? You will start thinking that maybe there is an acquisition going around. Okay, maybe there is a takeover that is going around. That's why such huge number of shares are being bought. Okay, so basically, whenever you will look at big orders, then only you will form a perception. But if I look at some small orders, so obviously I won't be forming any such perception, right? Now let's say you saw that there's an sell order of, let's say, 10 lakh shares. So again you will form a perception. Okay, so as soon as you will see that there's a sell order of 10 lakh shares, so again you will form a perception. You will start thinking that maybe there is something wrong with this company. That's why such huge number of shares are being sold. Okay, now as a result of this, you will also start selling your shares, right? So basically this is the perception of general public. Okay, now due to this perception, buyer and seller will suffer. Let's say if a person wants to sell 10 lakh shares, now you have formed this perception that there is something wrong with this company. That's why he is selling such huge number of shares. Okay, so because of this perception, now what will happen is that everyone will start selling the shares. So as a result, the share price will collapse. Okay, now because of this, that individual, let's say Mr. X, he will not be able to sell the shares because now no one is willing to buy the shares, right? Because there is a perception in the market that there is something wrong with the company. Okay, but that is just a perception, right? You don't have any such confirmed news. Okay, that is just a rumor that maybe there is something wrong with the company. Okay, so it means that just because of this perception, the buyer and the seller, they can suffer, right? They may not get a good price of the shares. So because of this, in some stock market, not all, there's a parallel system introduced, which is known as dark pool trading. Okay, so that system does not exist in every market. That only exists in few markets. Okay, now the question is, what is actually dark pool trading? So dark pool trading are off stock exchange transaction. Okay, these are off stock exchange transaction. It means that the transaction will not take place on the terminal. It will not take place on the stock market. Okay, now usually these tradings they are for large quantity buying and selling. Okay, so over here the buyer and the seller, they will deal privately. Okay, so stock market is not involved. The buyer and the seller, they will deal privately. Okay, so no one will know about it. So as a result, there will be no volatility in the share prices, because like I have told you that due to the different perception formed, there can be volatility in the share prices, right? There can be fluctuation in the share prices. There can be some abnormal fluctuation in the share prices. So if just imagine if these transaction does not take place in the stock market, but instead the buyer and the seller, they are dealing privately. So as a result, there will be less volatility in share prices, right? Okay, because of the different perceptions. Now once that private transaction is over, now what you have to do is you have to basically send a letter to stock market indicating that there is a sale of XYZ company shares to this XYZ person. Okay, so that is something which will be on your part. You need to send a letter to the stock market and you need to inform them about the sale of shares or about the purchase of shares, whatever the case is. Okay, so if you inform the stock market once the deal has been executed, so now as a result, there will be less volatility in share prices due to different perception. Okay, so if you want to sell large quantity of shares or if you want to buy large quantity of shares, then what you can do is you can basically deal privately with that with the XYZ individual. Now many financial institutions they do offer such services. Okay, but like I said that this service is not available in every country. Okay, so all right, so that was the main understanding regarding the dark pool trading. Now let us discuss the advantages and disadvantages. Now in the advantages, I have mentioned that there will be reduced impact on prices, right? So there will be no artificial movement in the prices. Okay, because that transaction is actually taking place off the stock exchange. So there will be less volatility in the share prices due to the different perceptions. Okay, then secondly, there will be lower transaction cost. Now let me tell you how there will be lower transaction cost. Now basically you haven't used a broker terminal, right? So the commission which is paid to the broker, that will be saved, right? I'm not trading via the stock market, I'm dealing privately. So obviously the commission which I have to pay to the broker, that will now be saved. So that will result in lower transaction cost. Then if I talk about the disadvantages, so I have written that it will result in unfair reflection of market prices. So I told you before also that only few stock exchange have allowed this system. Not all of them has allowed. Okay, so those who have not allowed, they claim that market should work on fair mode. Okay, so they say that if this is the perception of stock market, then you have to face this perception. Okay, so they say that this is actually the main feature of stock market. Okay, that is fluctuation in share prices due to rumors. Okay, so that is what they believe. That's why they don't allow this dark trading, dark pool trading, because they say that the market that should work on fair mode. Okay, the buyer, the everyone in the market should know about the deal which is taking place. Okay, so even if they say that even if the prices are fluctuating due to rumor or due to the perception formed, so let it be. Okay, because that is a fair mode of that is basically a fair mode. Okay, then the next one is that buyer may not get the best price. Now let's say the buyer sold the shares of the stock market. Now what you have to do is you have to now send a letter to the stock market, right, to inform them about the transaction. So as soon as you will inform the stock market, again a perception can be formed, right, that this XYZ company's, let's say, director have sold their shares. So now next day the prices can again collapse. Okay, so again the buyer and seller can suffer. Okay, so those were a few of the advantages and disadvantages of dark pool trading. I hope you guys liked the video. So don't forget to subscribe to my channel for more future videos. Thank you.